Did you know that if you had missed investing on 10 specific days during the year for the past 10 years, on average you'd have made 45% instead of 231%? Timing is crucial. You sure don't want to buy the top of the cycle. And let's cover 4 secret indicators that professional traders use to time their entry into the market. Welcome to Startup Self-Funded, where entrepreneurs and solopreneurs can learn to build a minimum viable treasury to self-fund their businesses without chasing VC's funding. Before I introduce the 4 indicators, be sure to subscribe to the channel and take a look at upcoming playlists that will give you a detailed explanation of how I will be turning $100 into $10,000, $500 into $50,000, and $10,000 into $1 million over the next 12 months. Obviously, no one wants to wait for the perfect 10 days of the year to make an entry. So, let's average a rough entry and then be a bit more patient to double our capital at the right time using a margin account. Take a look at the description of this video for a referral link to TradingView, which is the standard charting tool used to access these 4 powerful indicators. 1. A stochastic RSI. 2. A fear and greed index. 3. A pi cycle indicator. And 4. The funding rates. On TradingView, you can click on Indicator and add the stochastic RSI. Then switch back and forth between a daily, weekly, and monthly time frame to get a basic idea of when is a good time to buy. Typically, it should be when the RSI is below 20%, and more precisely when the blue line crosses above the red line. A stochastic RSI is a mathematical expression that assesses if an asset is overbought or oversold based on its price and momentum. Be sure to understand that these are probabilities and have a significant amount of false signal, so it's best to use the other 3 indicators before making a decision. The more indicators telling you that this is the right time, the better your entry will be. In this particular case, the goal is not to get on the exact bottom of the price, but more dollar cost averaging during a period of time when the price is significantly undervalued by buying Bitcoin specifically without any leverage. For the second indicator, add Simplified Crypto Fear and Greed Display. Every time you see this indicator, yellow is likely a good time to accumulate. Meanwhile, you want to avoid green. This is a measure of how much fear and greed there is in the market, partly assessed by sentiment analysis of social media feeds. It is important to understand that the market is actually moved by market makers, who tend to push the price down or up to maximize their revenue by liquidating small traders. When these traders have capitulated, meaning the fear has been maxed out, the market makers will start pushing the price up again to attract new participants by giving them hope, which will lead to greed building up until the market makers start pushing the price down again to liquidate these new users. This market manipulation tends to occur as much on a small time scale, all the way to much longer market cycles of 4 years. Large swings are often occurring to coincide with relevant market news, which are used as a catalyst. But make no mistakes, the best way to make money is to understand and trade alongside the market makers. Next, we can add aggregated funding rates by Eli Cobra. You can also double-check on this link. And when you see funding rate highly positive, it's time to be careful and reduce the amount of leverage you have. Probably not a good time to buy. Otherwise, when the rates are highly negative, that's a good time to accumulate. Next, let's add a pi cycle indicator low and high by Ingenium Tufin. When the yellow crosses above the orange, that is often a signal that we reached a top price for the cycle. This indicator is not as useful for timing the bottom prices, but is very useful to time our exit before the next major crash. If you see this indicator telling you that the peak is near, then avoid getting into the market. As well, if you have any questions, feel free to drop a comment or join my free private Telegram group. If you enjoyed this video, please like and subscribe and watch the next video on market cycles, as you may learn that Bitcoin halving is not the best way to predict market cycles, tops and bottoms.